Good morning and afternoon, and welcome to another edition of Gulf Intelligence Daily Webinar. I'm Vandana Hari of Vanda Insights, joining you from Singapore. I am the guest host today and for the next 2 days. And it's my absolute pleasure to welcome today Peter McGuire, CEO of XM Australia, Vladimir Langhammer, Managing Director, Supply and Trading at OMV, and Robin Mills, CEO at Kamar Energy. Now, some analysts are seeing this as a toxic troika week. We have the growing jitters over the Chinese real estate group Evergrande and its spiraling debt crisis. There's a fair bit of apprehension over what Jay Powell might say after the Fed's tapering and the dot plot. I'd like to start with Peter. You've been watching the Australian markets and the Asian markets. And of course, the Evergrande crisis is the talk of the town, not just in Asia, but globally. While clearly there were other factors in the risk asset sell-off that we saw yesterday, do you think the fears over an Evergrande contagion are overdone, or do you think one still needs to be on basically edge of one's seat?
Well, good morning to everyone. I think you need to be on the edge of your seat. We understand that China's been shut for 2 days, so there's the first part of it. Hong Kong's still down 0.3% today, and its broader market's down nearly 0.7%, Vandana. So it's been a mixed bag. Aussie's up about 0.35%, but you've got the Nikkei down about 2.2% and everyone in between. So it's a choppy day. Some of that momentum pushed down. The uncertainty is how the debt is handled on Thursday, as far as that, I think it's about 80 odd billion that needs to be financed. I've got the notes there somewhere. It's an enormous amount of money. And remembering they build 600,000 properties a year, the great concern is what happens to those investors, and it's all majority bought off the plan. So the Contagion, the second largest property group in China, it's going to be a hard one to manage. And could this be the start, or may it, we see some form of assistance from the government? It's, I think, too early to call, and it could be a very, very interesting week as it unwinds.
Yeah, could this be the start? Actually, that was going to be my next question for you, because we know there's a lot of tectonic shifts going on in China, right? Like, where does one start? Even all the crackdowns by the government on various sectors. Do you feel, I suppose this is more of a gut feel really than anything else, but do you think that this could be just the start of an unraveling in more corporate giants in China?
I wouldn't be surprised. I think the debt, and how many other Evergrandes are there? That's the concern. They're a conglomerate that encompasses electric vehicles. As we know, they build and operate theme parks as well. The financing, you've got 171 domestic banks and you've got 121 financial institutions that make up, how they arrange their finance or arrange their funding, and the knock-on effect to emerging markets and the internal side as far as China. So it's too big an argument to just say it's all going to be settled and it's going to be just a walk away. The stock price is down, I think, the best part of 80%. So yeah, how it unravels, no one knows, but I think it will be messy. And it's just how many other Evergrandes are out there built on debt. Reminds me of those wonderful entrepreneurs in the Western Australian mining sector in the early 80s that built everything on debt. Eventually, you've got to come a judgment day to repay.
Coming back to the Fed and central bank meetings, Peter, you were mentioning to me earlier that there's quite a few central banks that are meeting this week, right? So how do you, in general, I presume you'll be keeping an eye on what they say and do, but how do you in general see them juggling these twin imperatives of keeping inflation in check while also boozing the economy with easy money?
Well, that's the interesting point. You've got Switzerland, Indonesia, Bank of Japan, Bank of England, and the Fed. I may have missed one or two others. So it's a dynamic week, and then you've had elections, Canada and Russia and Germany this weekend, and of course finding a new prime minister for Japan, all in a period of around about 9 days. So how does it play? The Fed, I'm not expecting, I think it's more dot plot. Where are we as far as the meeting concluding at about 1800 tomorrow, 1800 GMT tomorrow, that's Wednesday. And the risk as far as inflation is the great concern from the spending power as far as the man and the woman on the street. That seems to be the hurt factor, and how they're going to contain that. It's very, very high in Australia as far as food costs, fuel, and all the other associated. I'm not sure how it is the rest of the world, but I'm pretty sure it's in the same boat. And then naturally, what do banks do with cheap money or free money? And how do they start to ratchet up? We've got booming house prices in Australia and certainly in the US, and they tell me in the UK as well. So it's been, and Canada, one-way traffic. So that's a concern. And then the next concern is when do you start ratcheting up? Is it next year? Is it mid next year for the Fed? And I'm not expecting surprises really from J-Powell tomorrow. I think it'll just be they'll push it out to November as far as taper talks and when they'll start to pull that 120 billion a month off the table. So or in smaller tranches. So there's what I'm thinking. And US dollar index, keep an eye on it, 93.15 at the moment.
Oh, yes, at 1 month highs as well. Talking of gas prices, Peter, is surely Australia as a producer and exporter is in a position to take advantage of the situation on a net. I know inflation is a problem as well, but on a net basis, do you think Australia comes out a bit of a winner from this high gas prices?
Well, it probably does from an employment standpoint and for some components of the economy. But if you're not associated with it, you're just in a large city like Sydney, and you're not, it's no benefit to you. It's a benefit to the overall economy and your GDP. And but to the man and woman on the street with lockdowns, and we're now in month 3, it's a different mindset. It's more or less, the economic carnage across Australia is monstrous for small family businesses that have just been decimated. So there's the storyline that I think people are more focused on as far as survival mechanism or survival mindsets.
So, Peter, let's, if you could unpack a little bit more for us about what you were mentioning, you expect the Fed to do. I have been reading some reports and suggestions that given that how much the markets are already on tenterhooks, volatile, there's the Evergrande thing happening, then the US debt ceiling crisis, that the Fed will not rock the boat, especially in times like this. From what I understand, we are expecting, however, to get a little more clarity on the when the Fed begins to taper its asset purchases, and perhaps on a rate hike. Would you agree with that? What are you expecting to hear from Powell this week?
Well, I think another thing that needs to be added, and I agree with what you've just mentioned, but the other side is the employment numbers that were very weak in August. And we're only a week and a half away from the new numbers for September, that non-farm payroll, the first Friday of the month. So there's the storyline that I like to drill down on. We've got the inflation story. We understand that not expecting any surprises coming tomorrow from Fed Chair Powell. I'll push it out to November, the dot plot configuration, and then I would say maybe a rate rise mid-year next year. Now that's what everyone's thinking, but there's a lot from a trading perspective to take on board. First off, how deep is the inflation story? How much of a contagion, and we might be sitting here in 2 weeks' time and Evergrande's gone. It's all finalized, no problems, no damage, or we might be sitting here in 2 weeks' time and the Dow's down 10%. And crude's at $60, and there's a wipeout across all of Asia Pac and a lot of the other emerging markets, and certainly the more mature ones. So there's the story that I think needs to be considered. The COVID numbers ramping up in the States. They haven't got those under control. The storyline as far as Delta. And it's just very much a wait and see. Our business is primarily on short-term trading, so we're only looking for principally opportunity. But there's certainly going to, I think, the volatility over the next month or two could be dramatic across the currency and commodity sector. Have a look what's happened as far as iron ore in the last month and a half or month and a bit, down the best part of nearly 25%.
Peter, Vladimir, and Robin, thank you very, very much for participating, as well as all our viewers who tuned in today. And we'll close the session here. Thank you very much.
Thank you. Bye-bye.
Thank you.